Hello and welcome. Welcome everyone to the blockchain webinar. The webinar from BlockStart about the latest trends, myths, and things that you might not know, or maybe might know, but or might be still interested in finding out. Today we have 4 nice guests in this webinar that I will present in a few seconds. My name is Vytautas Černiauskas. I come from Civita, which is one of the consortium partners together with FSuccess and BrightPixel at the BlockStart program. And I will also tell a little bit about what some small things that we're doing within this program at the very end of this webinar. And today we're, as I said, we're going to talk about some very exciting things, trends, maybe even myths and facts about blockchain. And we have, first we will start with Baptiste Cota from LeadBlock, who is going to show us a sneak peek from the report that LeadBlock is working on about the latest blockchain trends. So really hope to hear some interesting tidbits from the upcoming report that is going to reach or be published later this year. So no pressure, Baptiste, but we're really eager to hear some exciting bits from the upcoming report. Then we're going to have Mirko Lorenz from TruBlo, and Mirko is going to show us or tell us about some exciting and unexpected areas of using blockchain for blockchain-based solutions in some very unexpected ways that are not the typical fintech or provenance or other solutions that you might usually see. And Silvan Jongerius from GDPR and the BHub program is going to talk about bittersweet relationship between blockchain and GDPR. And as we heard in the previous webinar, GDPR is actually one of the main hurdles, if we could call it, or one of the main pain points for a lot of companies, SMEs and startups and other players working with blockchain solutions. So it is a big headache. So Silvan is going to talk more about that. Then we will hear from Andrius, who has a very interesting talk about 10 interesting facts about blockchain. Then again, you might know, you might not know, but I have heard this this presentation before. It's really cool. I like it very much. And last but not least, I will talk about 3 main sectors that are most mature for blockchain application, and also show you an interesting tool about evaluating if you need blockchain in your solution, in your company, in your sector, etc. And we will finalize with the discussion. Okay. I am now giving word to Baptiste. Baptiste, please introduce yourself. And as I said, we're eager to hear about the upcoming report on the latest blockchain trends.
Sounds good. Thank you. Thank you very much for the invite. Hi, everyone. So Baptiste here from LeadBlock Partners. We're a venture capital fund focused on the B2B blockchain space. We're based in London and Paris, and we invest globally. So please do reach out. We're super keen to find new startups in which to invest, and we'll be announcing a couple deals soon. So we're pretty busy and pretty happy to be. But yeah, as explained, I'm here to give you a bit of a sneak peek into the Enterprise Blockchain 2021 report that we're working on. Maybe I'll take a step back first to explain a bit what that is and why we're doing it. Basically, last year we published the 2020 version, which was the first report we did, and the idea was really to do a deep dive into the ecosystem of B2B blockchain startups, because we thought it was important to showcase how rich and how dynamic the sector is. I think we all know here that the average investor, the average corporate, is not necessarily very knowledgeable about blockchain or about crypto. The number of times that you hear people, saying crypto and blockchain in the same sentence, thinking it's the same thing, happens a lot still today. So you really need to put it out there, and we really wanted to show the tremendous opportunities that there are in the enterprise blockchain ecosystem. So you guys on the webcast here today. So the report really answered questions such as who are these startups, how many are they, in which sectors do they operate, how much funds have they raised, how much revenues do they have, what technologies are they using, to really put data behind blockchain applications and not just use cases. I mean, I'm sure you've seen a lot of reports about use cases. They're very important, but you can't read so much of them. We need real adoption, right? So we surveyed 200 startups, gathered a number of data points, published this report, achieved a strong reach. And we wanted to do it again this year and to do it bigger and with the support as well of BlockStart. So very happy to have you. So we launched the survey again. So if you're a startup, please do participate. There are a number of opportunities for you to get exposure through that report. So please go ahead and reach out to us. So before this call, I want to have a look at the results that we have this year, and I'll be comparing them a bit and sharing the evolutions we've seen versus last year's results. I'd say the first thing that's really clear is the growth of the ecosystem. So last year, for example, the average startup had raised 1.4 million euros. This year, the average startup has raised 2.5. So startups have been quite successful at raising. We've seen a lot of larger rounds. Ourselves, in a more qualitative way, I would say, have seen a lot more rounds in the Series A or even Series B. That wasn't the case 18, 24 months ago. So that shows that companies, have reached the stage where they can raise such amounts, and that investors, almost more importantly to some extent, are familiar and are able to invest in companies at these stages and in these sorts of amounts. There's a number of seed funds that do blockchain, especially in Europe, but you don't have so many of these growth funds historically. So that's great to see them come in. Companies are also generating a lot more revenues. I mean, the average startup we surveyed is generating 3 times more revenues than last year, and they plan to do 4x next year. So they're quite optimistic because they're speaking to a VC, but it's what they should be. And I'd say, us from our discussions with startups, we're seeing enterprises and SMEs as well being much more comfortable with adopting blockchain technology. Historically, you had to do workshops, pilots, etc. And today, startups manage to sign pure SaaS or pure in-production products pretty quickly or much quicker. And to some extent, it's due to blockchain being more understood. To some extent, it's due to products being higher quality and also putting blockchain to the background, being more abstract about the blockchain, because in the end, what you want to sell is a product. You don't sell a blockchain. People can just use blockchains if they want to, but they want to use your product. And so a lot of that has really driven adoption, which is great, and we see it will keep going. Now, another trend that we had identified last year and that we still see today, which is a bit more negative, but it will be solved in time, is the funding gap. So a number of the startups here on the call today, probably tried to raise capital. Last year, what we found was that here I'm just talking about the startups. So last year we surveyed 200 startups. They were looking for 350 million over the next 12 months. We know that in Europe, specialized funds have less than 100 million. So there was a lot of demand. And this year, the survey is not even finished. We haven't reached the numbers of last year, and we're already at 450. So, the amount of capital needed remains important. There are a limited number of funds. There is a bit of a knowledge gap. The average VC fund doesn't know blockchain too well and is not generally very comfortable, increasingly so, but not generally very, very comfortable. And there's just a bit of a low willingness for that. Maybe I'll just advertise another report, but the EIB published a report about AI and blockchain last week, I think. And they calculated a 1 to 2 billion funding gap overall for the European blockchain ecosystem. So there is a big need to invest in the space because there's a lot of startups, there's a lot of knowledge, there's a lot of quality founders. And that's all great. We just need the capital to come in. We'll take a bit of time. We're doing our best, and others are as well. So fingers crossed. Another interesting point is the quality of the founders. Founders have on average pretty high experience. We're talking about 22 years of work experience for the most senior partner in the teams. I'm not saying it's a bad thing to be 25 years old and create a startup. You have a ton that work very well, but it's great to have, especially on a B2B side, people that understand the industry. It's a bit harder to do it. It's a bit easier to do B2C when you have limited experience. It's a bit harder on B2B to speak the language of an industry. So people that come from the industry, quit their jobs and launch a blockchain startup, that's pretty interesting to see. They really saw a problem they thought they could solve with blockchain. So that's a great addition to the blockchain ecosystem. And then clearly they need a CTO, they need all that. And I wanted to finish on the tech side, which I think some of you will be interested in. Then we'll have other subjects in the report on ESG and other themes which are pretty interesting. But on the protocol side, so B2B startups typically don't build their own protocol, they use one. We're seeing Ethereum leading the way still, Corda second, and the Hyperledger suite coming in third, which is a bit of a change to last year where Corda was third. They've been pushing a lot for adoption across other sectors. They started being very fintech financial focused, and now much larger adoption with Corda. And then you've got other protocols like Quorum, which is an extension of Ethereum clearly, but we'll take it separately. You've got Bitcoin, you've got Tezos, you've got Algorand. We've been seeing a bit more of Algorand, but it's still in a longer tail. And the other interesting thing is 30% of startups are planning to switch protocols. And here, in terms of popularity, it's a bit of the same order, but in terms of relative share, newer protocols like Tezos or Algorand have a much higher share. So it's still, to be played for, and startups, and I'd say any startup should, be on the lookout for a protocol which works better for you, and they keep improving. So, you own, typically, if you're an application startup, you own the product, you own the client. And more often than not, if you tell them I have a better backend solution, they'll tell you yes. So be on the lookout for improving your backend, basically. And yeah, that's a bit of some of the sneak peeks. I didn't want to give you everything, so please read the report when we publish it. We'll close the survey maybe in a month, write it over the summer, and publish early September. So hopefully you get something out of it. But thank you for listening. Thanks for the invite.
Thank you, Baptiste, for sharing. I was about to ask a question about which I don't know what surprised you maybe most, either this year or maybe even last year, or what was the most unexpected thing that you discovered. But if you have time, can you also answer a question from our participant viewer on YouTube who's asking a question: are VCs looking at sustainability from a climate perspective when they place investments in blockchain? It's not directly related to the report, but still maybe a question to ask.
So I think this comes from the fact that we're talking a lot about the impact of blockchains and proof of work blockchains on CO2 emissions. So I mean, on that side, I guess I don't think that comes from VCs. No. I don't think VCs worry about the proof of work consumption and CO2 emissions of blockchains, because if they invest into blockchains, they're not worried about that, to be honest, because we know, Ethereum is going to move to POS, and we just kind of know it's not a big issue. Having said that, the environmental side of things for us as a fund, for example, and I know for other funds, it's a huge theme. It's something that, is positive from a society perspective. So we're very happy to invest in those, but we also think it's a huge driver of adoption. And a lot of clients are interested in products that have a sustainability angle. So we've seen a number of very successful startups that use blockchain for these themes, partly because a lot of it is transparency. And if you can be transparent about what you do, about the engagement you take, then you can value them. And if you're doing organic food, for example, the average person doesn't actually believe the logos. But if you can prove it, he'll pay for it. If he pays for it, then you can invest in it, and then it just kind of works itself out. So that transparency aspect of blockchain to sustainability is very, very valuable. So I think that it's more on that side, on the theme around, Tesla talking about that. Oh, actually, it uses a lot, it emits a lot, and now joining this consortium where they want to drive, renewable use for mining. That's all fine and well, but yeah, I don't think it's not a big worry. It's not a big worry.
Thank you. Good answer. And thanks for sharing, Baptiste. It was really interesting to hear the insights, and particularly the gap of the funding gap, and also the experience of the founders. It's really interesting. Thanks for sharing, and we're looking forward to reading the report when it comes out. What is the date that you're planning?
I think, I don't know, 15th of September. Now we have to publish on time if I say it, but
no pressure. Okay, so somewhere in September, let's say so.
Yeah.
Okay. Looking forward to reading it and getting the insights from the market. And as you said, the startups and others that have not responded to the survey, please do. We appreciate your input. Okay, thank you, Baptiste.
Thank you. Looking forward to hear the other speakers.
And speaking of other speakers, Mirko Lorenz from the TruBlo program, please come on stage and tell us about unexpected areas of blockchain application. You already have mentioned some in one of our previous webinars, but we're really looking forward into your views of some non-traditional uses of blockchain in the startup world.
Yeah, with pleasure. At this very moment, I'm getting a warning that my battery is low, but I think I will do. I make it quick and then I recharge. Yeah, thank you. Yeah, I'm here from TruBlo. I share my screen just to show the web page, and then I show 2 examples. Yes, this is TruBlo, trusted content on future blockchain. So the name says what you just moderated. We are looking for ways and new approaches how to use blockchain for reliable content. Reliable content is something, if you think about it, so essential to all these discussions, all these evolution of markets and companies. If you cannot entirely believe what somebody says or claims, how do you do business, right? It's a complicated situation. So what you mentioned, in order to make this a bit more concrete, I have opened 2 pages of examples of how you can apply blockchain and such technologies for content. One is a company from the UK. It's called Serali. They have a competitor in the US by the name of TruPic. They do pretty much the same. What they do is they kind of capture the camera on the iPhone or the Android. They even can go on the chip. The competitor in the US will go on the chip. And then you have added information that allows to verify when a photo has been taken, by whom it has been taken, that it's not just a screenshot, that's a real shot, and so on and so on. And think about the possibilities. All these fakes and deep fakes that we're seeing at this moment would be kind of impossible if you have metadata that would filter out content that is not reliable, not trustable. So that extra layer of information could be very helpful. Just give it as an example. Last time people asked about the URL, so now I think it's simpler when one sees the name. And let me quickly go to yet another example. A company from Amsterdam did a longer interview with the CEO and founder out of interest. Just to make it clear, both Serali and WordProof are not part of the funding that we do in TruBlo. I come to that in a second. But it's interesting to see companies that have already evolved to a certain extent. WordProof has been a winner of the NGI competition in late 2019. They received €1 million from the EU to go further. What they do is they enable a relatively simple use of blockchain. When you publish an article on WordPress or on other CMS, you get a timestamp. And that timestamp then actually...
I think we lost Mirko. His battery, unfortunately, didn't last that long. But we will ask him to come back after he recharges his laptop battery and finish his talk, because it was really quite interesting. Silvan, it's your turn. We're looking forward to hear from you about, as you formulated it, a bittersweet relationship between GDPR and blockchain. I know that you're an expert of GDPR, particularly in the tech space. So please, please introduce yourself and tell us about this exciting relationship, or sarcastically speaking.
Great, thank you so much, Vytautas, for the introduction and for inviting me. Also, I have my laptop plugged in, so I think I should survive 10 to 15 minutes with presenting also a few slides for you today. Right. So perhaps as a short introduction, I'm not sure if you can see my screen. That's always the key question, of course, during these kind of calls, but that works. Fantastic. Very briefly about myself, I'm the managing partner at a consultancy called Tech GDPR, where we help technology companies with GDPR compliance and privacy. But I'm also the head of BHub for Europe in Germany. That's a project that I'm also working with Vytautas together on. EU-funded project accelerating blockchain startups and connecting them with small medium enterprise. I'm the president of the board of a small non-profit association in Berlin called BearChain, connecting the blockchain ecosystem, and I also have been very involved in the privacy working group of the association in NATBA. Anyway, enough about myself. I'd like to recap very quickly some key properties of blockchain and then basically hold them against the light of the GDPR to basically give you a bit of a perspective of how the two go hand in hand, or perhaps not, right? So blockchain has some key properties. There's an immutable component, information written onto a blockchain cannot be changed afterwards. It's distributed in nature. The information is spread amongst different nodes in the network. It's transparent in most cases, especially public permissionless blockchains. Everyone can monitor exactly what's going on. It's time-stamped. There's a time and date property attached to every interaction on the blockchain. It's in some cases permissionless, in particular in the public permissionless kind of blockchains, and it's excellently placed for value transfer. Now, these are the things that we'll be looking at also with in relation to the GDPR. Before we do that, it's important to distinguish different blockchain types. In particular, the public permissionless, the open blockchain types such as Bitcoin, Ethereum, but also many others these days, up to the private permission, the more private types of blockchain used in consortium kind of settings. And also certain mixed types between public permission, the information may be public, but only writing may be permissioned, and also hybrid mixed forms of these blockchain types that can be used in particular situations. And each of these blockchain types have their own particular challenges. So what does the GDPR require? So GDPR stands for the General Data Protection Regulation, in force a little over 3 years right now in all of Europe, and also still in the UK, actually, even post-Brexit. And it requires a couple of key things, such as lawfulness, fairness, and transparency in the processing of data, a limitation of purposes when you collect personal data. So personal data could also only be collected for a specific purpose. Data minimization, only collecting the necessary information, not going beyond that. Accurate collection of data. Storage limitation, so not keeping data for forever. Integrity and confidentiality when dealing with data, and accountability over this process, basically ensuring that as a responsible entity, you are taking the accountability of making sure that the data is being processed in accordance to the GDPR and to the rules and guidelines that come with it. There are different specific roles under the GDPR. There's the data subject, the person whose data we are processing, the controller determining the purpose and means of the processing of data, basically the primarily responsible party for collection and for processing of data, normally your contract party if you give your data to someone. The processor who only processes data on behalf of the controller, and then didn't list it here, but what may be interesting in this specific context is also the concept of a joint controller or joint controllers, multiple parties that are mutually responsible for the collection and the processing of data, and also jointly determine the purposes and means of that processing. data of or the processing of personal data can happen on a certain specific legal basis, such as consent. You may have all heard about it, but there's also, for example, the performance of a contract. You can process the data if it's required for a contract that the subject is part of. You can do it under a legal obligation. In Germany, I need to keep my trade invoices for 10 years. That's a perfectly valid legal base. I don't need anyone's consent to keep trade invoices for 10 years, even if their name is on it. Protection of vital interest of data subjects, task in the public interest and authority, more so in medical situations, for example, or perhaps in the execution of tasks in the public interest or authority. And legitimate interest is another interesting one, also for private users. If you have a legitimate interest to keep and to process certain personal data, you can very well do so without having to seek consent for that. There are some conditions attached, but let's not get into too much detail today. Right. Because what we want to have a look at is the GDPR and blockchain. Are they actually compatible, or perhaps better, how compatible are they? There's certainly some misalignment, where one thing you may have picked up if you paid attention before, the storage limitation of the GDPR is, of course, something, so not keeping data for forever, not beyond the period of time that you have a legal base for it, is not absolutely compatible with the immutable aspect of blockchain. Right? So there's some problems around it. If you put any personal data on the blockchain, you should actually expect that it can, in most cases, not be deleted. Confidentiality. So keeping data confidential in a public network is also something that where we should place a question mark or two. Is this something that can be achieved? Well, by design, it's not how it's meant. It's not how it's been set up. So certainly something to keep in mind. Accountability. That's a very interesting one, where the GDPR requires that there's clear accountability for data processing. In blockchain, sometimes you're asking the question, who's actually responsible? And that basically is derived from the key question about who is controller and processor. Now, in a centralized network, and let's perhaps talk about banks very quickly, how a bank would work. It's a very central function, accepts transactions, sends them onwards, transfers money between one account and the other, and sits there very solidly in the middle and is responsible for these transactions as a controller. Now, if we look at even in its most basic use case, financial transactions, in the use case of a blockchain network, Bitcoin, Ethereum, whatever, you'll find a network of different nodes that all have similar roles. No one is really in control. Each node can accept transactions and will actually basically just forward them to the other nodes in order to make sure that the transactions are verified and included in future blocks, right? Now, the big question is, of course, who is responsible in such a case? Is perhaps the first node, is that the controller that accepts the transaction? Are all these nodes perhaps joint controllers? And this, there's no clear answer to this question, and I'll, sorry to spoil it, but that's basically where things get very complicated, and it will be very much dependent on how these different networks are set up and how the whole governance is arranged in it. Also around the right to be forgotten, for example, one of these big items that came up the moment that the GDPR was introduced. Yeah, but how do we deal with the right to be forgotten within the GDPR? If we're storing data on blockchains, isn't that fundamentally incompatible? And you know, from some perspective, it is, right? So in Article 17, there's the right to erasure in the GDPR, which can be interpreted in different ways, fairly absolute or more relative towards the kind of data that you're processing or the methods of processing. But there's also some questioning about the immutability of blockchain, how relative and how absolute that actually is. And to perhaps sketch another example, if I take my passport, where I would have, of course, my photo is on there, my name is on there, etc. And I would create a hash out of that, which is a fairly common process within blockchain. Again, I'm not going into too much technical detail, but let's assume that I'm just hashing this information. and this information cannot be reversed, right? This is a one-way cryptography function that will always yield the same result. Use my picture and my name, and you come to this result if you use the same algorithm, but you can never reverse it. So the big question is then, can I then store this kind of information on a blockchain, a hash? And the answer is, well, yes, probably you can. But there's, of course, always the risk that someone obtains the original information, for example, my passport and the algorithm, and recreates that information and can then see throughout the blockchain where I interacted with it. So even these kind of apparently simple solutions to introduce some kind of one-way cryptography, they provide some safety and some privacy, but there's still ways of reversing that. So basically, you need to go a level up from this kind of function and come up with more interesting algorithms in order to be able to provide the right level of anonymity, and perhaps also to meet the requirements of the GDPR, so that you can have a way later on to delete data of a chain. For example, by introducing another piece of information that you can truly forget, and by that unlinking the original information that's in the passport to the hash or the anchor that's being placed on the blockchain. So what kind of solutions do we have? So let's talk a little bit about the visionary alignment, because it's not all, it's a bittersweet relationship. There are good aspects, there are bad aspects. And there's certainly some visionary alignment. For example, transparency also really helps in making sure that data is shared with all participants, because by default, every node in the network will receive all the information in the network. So it is great for transparency. There are ways of using data minimalization, for example, with these confirmations or hashes, or even better, using by proving certain facts using zero-knowledge proofs. One can certainly, by using blockchain, keep the control over their own data, which is a requirement in RESTful 7 of the GDPR, by using systems like self-sovereign identity. And perhaps to give you a little bit of an idea, building on the previous example with the passport, of how would you then store information on a blockchain. So for example, this is by basically keeping the data that is directly personal data of the blockchain, and by only storing the confirmation hash on the blockchain, ideally with some extra information that you can then break. But this way, you can still have the security, the trust function of the blockchain, verifying that information is true and correct in all cases on a blockchain, even storing confirmations of third parties that you may want to do about the information that you have provided, without actually storing that information on the blockchain itself. Right, then about the right to be forgotten. So this has been, especially around the introduction of GDPR, very often seen as a big disaster. Blockchain is not going to work, right to be forgotten, no way. But as a matter of fact, the way that I see it is like, this is something that can be dealt with. You know, it's a minor inconvenience, but you'll be able to get out. There are ways of bringing this together. As I said, the right to erasure is relative. It depends on certain conditions that are introduced by the GDPR. It's only under the use of certain legal basis, for example, that this right to be forgotten exists. And also, blockchain's immutability is also relative. Perhaps getting back to Satoshi Nakamoto's white paper over 10 years ago already, that the Bitcoin white paper was written. Even in that white paper, there's a section about pruning blockchains, which is a technical possibility to remove information that is no longer needed from the system, from the blockchain. It is not widely implemented. Some systems do implement it, but it's typically something that is not truly implemented. But there are possibilities of bringing that into certain solutions. Using privacy by design making sure that when you design a blockchain architecture, a blockchain system, it's very important to consider what is required. There are hard requirements in the GDPR to practice data protection by design, and if you would look into the extensive research work that's been done by many people in this field, if you properly assess all the risks from the beginning and make sure that they're remediated, especially before you put them on an immutable ledger, that would be a hard requirement and something that you could follow to come to conclusions here. Last slide around perhaps also looking a little bit at opportunities, not only at where things bite each other, but also what can we actually do. There are certainly blockchain opportunities that also support privacy and GDPR compliance. For example, by decentralizing personal data, by having data on your device instead of in a central database, you greatly reduce the value of any breach that may happen. It's not nearly as interesting to hack one data set than it is then to access 7 million of them, for example. There's individual control. And the opportunity is to give control over the data location to the data subject itself. So put control back in the hands of the data subject. Again, transparency helps you with providing full visibility of data handling. And in terms of immutable records of consent and compliance, this is a duty upon the controller to prove that you have certain consent and that there is certain compliance. You can use blockchain to prove the compliance with these particular record keeping requirements. Last but not least, data marketplace opportunities. I find Ocean Protocol a very interesting example of that, for example, where you can use blockchain to basically separate the data from the compute and bring compute to the data instead of centralizing data, rather decentralize it. Right, thank you so much. That was my piece on blockchain and the GDPR.
Thank you, Silvan. I think you managed to present this quite dry subject in a fairly exciting manner. At least it was understandable. It was interesting. We also had some questions from the audience, but I think you, in the solutions part, you did answer them, even though not all the answers are super straightforward and maybe technically challenging. I have a question on the note that I mentioned in the beginning, in the introductory part, in the webinar a couple of weeks ago that we had about regulation. Pretty much all 4 participants that talked about the main challenges in the regulation and policy area of blockchain, they all 4 unanimously agreed that GDPR is the biggest challenge, the biggest issue that the startups, SMEs, and other players are facing when they're working on solutions in the with blockchain application. Why do you think is that the case? Is it because it is very technically challenging? Is it because of those inherent contradictions that you presented? Or maybe there are solutions, but they're just not accessible for some reason because of lack of knowledge or lack of creativity, or maybe they need to use the better protocols, for example, that enable the right to be forgotten, or something else. What is your take on that?
Yeah, I think there are 2 main reasons for that. One is they're both new, right? Blockchain is a relatively new technology, and still innovation is ongoing. And the same as with the GDPR. It was the final draft was agreed upon 5 years ago. It has been in effect 3 years ago. There's not a whole lot of case law on it, and we haven't seen that much guidance. Even though the EDPB, the European Data Protection Board, is currently working on guidance for blockchain specifically. The only other guidance that is out there right now is by the French authority, the CNIL, which has been somewhat helpful in interpreting certain things, but it's certainly not complete. So I think that's one point that is both new. The other point, which is somewhat related to it, is that the GDPR is also old at the same time. because it was concepted with very classical client-server models in mind. The whole concept of decentralization was not considered at all in the GDPR. And I think what I highlighted is that I think the biggest challenge is really finding out who is a controller, who's a processor, what are the relationships, and how do you conclude these relationships if you have like publicly accessible networks. That is a really big problem at the moment, probably more so than the right to be forgotten, to be frank with you, and therefore the fact that such structures were not foreseen when the GDPR was drafted is probably another main reason for that.
Okay, let's hope it's addressed in the future, and maybe in the updates of this new old regulation. Okay, thank you, Silvan. Thanks a lot. We're coming back to Mirko. Mirko, we hope that your laptop is safely plugged into the electricity, and you can continue with the presentation that you started showing us.
Apologies for that. That was a first, entirely a first. Maybe it's too hot here in Germany since for a few days. So I will jump right in. We already discussed like how you can create a new kind of trusted layer for information. And if I take that a little step further, the content model that we see today, which pretty much applies to GDPR as well, is one where you get a lot of the services for free. And in return, that is the custom right now. Somebody is starting a data profile of you. And I think GDPR was once and foremost, kind of trying to rebalance this kind of model where this data collection is somehow more controllable by the end user. And I think once we apply a tokenization to content, something very interesting might happen. It's kind of an old dream of a journalist that I am or have been, that good content rises to the top, that good content is kind of paid for and valued for in new ways. Right now, if you get a lot of attention, that's much better than providing very, very, very good content. So the more users you have for whatever content, and there is a range of from yellow press content to high-level analysis, the easier you get to attention. And I think in the tokenized content economy, what we saw with WordProof to some extent, where you can trust the information that is presented there as true information. You can create new models for writers, authors, for creative people. And creative people are so far by platforms often kind of short-sighted. For example, we see newsletters that are very successful with one author. There is one journalist, she's a professor for American history, and she's, at least in 2020, she was one of the most successful journalists with almost $1 million in revenue per year with her newsletter. It was Letters from an American. She's basically was kind of writing a letter to future historians of what happened during the Trump era. So you can create valuable content, and I think blockchain can be a big help with it, but then there's a change between the open GDPR usage and contractual usage where you are kind of a subscriber. And again, tokens could open so many new business models. Currently, we see a lot of value quality websites moving behind the paywall, but is that sustainable over the long run? I won't have, I'm reading a lot, but I think more than 5, 6 subscriptions to even quality sources is difficult. Just in my mind, it's all consumers, all of us here, think a long time before you make another subscription. Even if you could afford it, the value of paying basically forever for something versus what you get out of it, it's not an endless market. So before I get too far away from the topic, I would like to mention one thing that has popped up in certain areas. We could take it even one step further. Imagine a future economy where tokens are used to drag in elements that are currently not part of the economy. I'm an economist by training. You call that external goods. External goods, in short, is what nature is. Like when a car maker does some damage to nature because of recycling issues, because of combustion engine errors, he or she is usually not, doesn't have to pay for it. That's paid by society. I can see so many new ways of how we as consumers and we as entrepreneurs could offer models where this is kind of balanced out by using tokens for good content, yes, but even for production. If I want to produce one-time usage plastic packaging, yeah, you can do that, but you need to pay for it. You know, you need to buy the tokens to actually do that. So the product has a different price and a different appeal. And somebody who is doing it differently might be in a beneficial situation. That's what I'm suggesting. Trusted content and content that could lead to an entirely different economy that is away from what we're seeing right now as the borderlines of this growth model for this current. And that, I'm ending here, makes me quite hopeful. And I'm really looking forward, like maybe shifting out. We just finished the selection of projects and companies who will get money from TruBlo for the first batch, 10 companies. And we will announce them next week on the TruBlo website. And then also next week, we start the second of 3 open calls. And the only thing that you need to do if you are a startup to get 75,000 and potentially even another 100,000 is essentially write a scientific paper of a few pages. So we want to support early support even before seed or venture to and find something out. And TruBlo is here to support and guide and we're staying there. Thank you very much. For the patience, apologies again for blundering this.
Thank you, Mirko. I think we're having connection problems as well. But thanks for sharing. Have a very quick question, but I'm afraid that we might not be able to hear you properly. But thanks, Mirko, a lot. It was interesting to hear your thoughts, especially from the philosophical perspective about some challenges that we're facing and that can be used by using blockchain technology or tokens in particular. Okay, thank you. And now I'm inviting to the stage Andrius Bartminas from Superhow, and Andrius is going to share 10 interesting facts, 10 myths about blockchain, and maybe do some debunking. Andrius, the stage is yours. Please present yourself and share your knowledge with us.
Yes, so hi everyone, my name is Andrius Bartminas. I am a co-founder and CEO of Superhow. We are the Q technology stack research and development lab. Basically, the most of it is D, so distributed ledger and blockchain. Basically, we work on lots of interesting projects. We have a hands-on experience working with the European Central Bank and Bank of Lithuania on CBDC, tokenization of fine art assets, tokenization of lots of things, also building infrastructures, private, consortium, public, so quite a deep knowledge about the blockchain. And today I will present you 10 interesting facts about the blockchain, starting from the myths. So the first myth is that cryptocurrencies and the blockchain is harmful for environment. So basically, it is a quite well discussed in the world topic about the Bitcoin, about Ethereum, practically about the proof of work consensus blockchains. And yes, when you think about that as an energy consumption, yes, it seems that it consumes a lot. But if you look at that energy as a security guarantee, which is basically which means that in order to overpower the consensus of the public network, you have to have at least half of that energy to spend basically in order to change the ledger information. So it is the totally different perspective that is a guarantee of the security of the network and immutability of the network. And in that perspective, the harm to the environment depends on the use case that you're doing on that blockchain or on that solution. So myself, I see blockchain not as a solution, but basically as a protocol, which means when we're talking about how much of energy consumes the blockchain, why we don't ask how much energy internet consumes? So basically, it is a same level layer. It is some of the authors even calls the blockchain the internet of value. So basically, we should see it as a totally different. It is not a solution. It is not a technology, but it is a protocol, basically the same as the internet. So this is an innovation of the internet, evolution of the internet. So in that perspective, all that discussion about the environmental impact is diminishing, basically. And also, as already was mentioned, so there are other than proof of work consensus mechanisms, for example, proof of stake, which are heavily used currently in lots of different blockchain solutions. However, the security, or how to say, the level of the security still on proof of work is much higher, and it is much more powerful from that position. Another myth is just that blockchain is only for anarchists. So basically about cryptocurrencies, about the revolutionizing things. So basically revolutionists, anarchists, central banks even calls, for example, Bitcoin as a money of no one, basically. So there are lots of discussions about that. And yes, so basically the blockchain was built, the protocol was built by people who wanted to change how the economy works and how the perspective of people and centralized infrastructures is done. So basically the start was there, but now we see more and more businesses coming into that blockchain industry. So today we have almost every central bank basically already working hands-on on a central bank digital currency implementation. So they're using different blockchain technologies. They're basically experimenting what the blockchain could offer for central banks. So today it is not the anarchist game, but actually the innovators game. So more and more companies, industries, and different industries are coming. And today, blockchain is not only used for financial transactions, but many more use cases, as already other my colleagues were mentioning. The third myth is that the blockchain and cryptocurrencies is best for money laundering and terrorist activities. So basically, one of the partners of the Coinbase, who she was basically the US government prosecutor, basically denied lots of times this myth. So it is much easier to track and trace the transactions on a public network than on for example, commercial bank infrastructure or cash. So when you have cash, you cannot trace anything, basically. Everything is offline. And she found that her colleagues were using basically Bitcoin to extort and to launder money. So it was the biggest case where she found that FBI guys were using the blockchain, basically thinking that this is totally private, totally anonymous. And it was a huge case for her because she wouldn't be able to do the same in a traditional money infrastructure, where you have to have a subpoena, where you have to have the order of the in order to get the information. So today you have everything on your hands, and you just need to basically to gather information and analyze it. The fourth myth is that the cryptocurrencies and tokens are kept in the wallets. So basically, this is the biggest the biggest myth, I would say, because from that perspective, the wallet is only the interface to the blockchain, and it is just the key store of the private keys with which you're doing the transactions, and you're interacting with your asset, which are kept in the blockchain in a distributed ledger. So the cryptocurrencies and tokens are kept in a blockchain, and wallets are just used as an interface to interact with them. So this is a huge misunderstanding from the regulator's perspective when they are talking about those custodian wallets and everything, basically trying to regulate different things. The fifth myth is that you can easily separate blockchain from cryptocurrencies. So there are lots of people who are like saying, oh, the blockchain is one thing and let's put the cryptocurrencies aside. So that is true when you are speaking about the private permission blockchain. So usually there is no cryptocurrency that is inside of the network or used for as a network currency. But that is because those networks are using different consensus mechanisms. So they're using centralized consensus mechanism instead of decentralized. And cryptocurrencies in the blockchain are used basically for incentivization of the network nodes, as well as remuneration for the usage of the network services. So basically, it is a currency which is creating the economy inside of that network. And it is very difficult to separate that when you're speaking about the public permissionless blockchains, because if there would be no cryptocurrency, there would be no network, and there will be no decentralization, and there will be no blockchain as we understand it today. Then there are some facts, basically. One of this is that the blockchain is the most secure data storage infrastructure in the world. So everyone has heard about that someone stole the cryptocurrency from exchange, someone has stole the cryptocurrency from someone's wallet or something like that. But basically that is due to the user error or how you securely use your private keys and how you store those. So basically, no one has hacked the blockchain. The real blockchain has a huge decentralization. For example, Bitcoin, Ethereum, it is like the possibility is equal to none, basically, to do that. Because the effort to do the hack should be not only like bunch of people sitting and trying to hack, but basically it should consume the energy of Austria to do that. So, and it is only theoretical still. Most of the blockchains are not designed to store media and files. So basically, blockchains are meant to store the data as transaction records, metadata. There are some publicly called blockchains, for example, Filecoin, but Filecoin is not a blockchain. It is IFFS basically, which has the blockchain incentivization and tokenomics on top to incentivize basically ecosystem to keep the nodes and make the social economy model inside the ecosystem. And then there is this that I like most, is basically that there are lots of companies who are thinking that if I will take the blockchain, no matter which, DLT, Corda, Hyperledger, Ethereum, anything basically, and if I will run it inside my organization, I will basically get all these features and all these benefits, and I will be able to market myself as a blockchain company, and I will build the trust with my market basically by doing that. So this is the biggest mistake. So basically, when you're making something that is meant to be decentralized in a centralized way, you're not basically solving that trust issue with the market. You can solve that issue with your suppliers, with your contracts, when you have the trust problem that you don't trust them, but when you have to make the market believe and make that trust of yourself, is basically you have to decentralize. And this is the key component basically in a success, how you should think about using the blockchain for your business. Ninth fact is basically the biggest innovation in blockchain technology is not the way how you store the data. So this is not the distributed ledger itself, but decentralized consensus, how you agree what is the truth on the network. So basically, this is the biggest innovation, because the DLT, like the distributed ledger technology, is an old tech. Basically, it was described and even used for a long time without naming it DLT. But basically, that decentralized consensus, where there is no sole or centralized, decision maker, but rather that decision is fully decentralized and incentivized by some mechanism. That's the biggest innovation, which is creating this huge impact on the market. How you perceive what is the truth, how you perceive and how you decide which block is the block that should be put in the blockchain. And the latest and basically my final is that the blockchain will not solve all the problems of the world. So it is usually when I'm speaking with the startups, they think that the blockchain will solve everything. And if I will take the blockchain into my stack and basically use it for my solution, I will solve some problems. So basically, and any problems. So certain business cases or certain businesses even doesn't need to be put on the blockchain, and there is no need to use the blockchain for that. So basically, you have to assess, you have to understand that the blockchain has cons and pros. So basically, when we speak about the blockchain, it has lots of limitations. So for example, transaction speed, due to the high decentralization level and consensus, just it takes time to agree what is true on the network. So basically, when you're doing that and you're thinking about the blockchain, you should think and you should assess if it is fit for you and if it makes some fundamental change to your business and how you build the trust between you and your users. So that's the last of mine, and thank you for your time. So this is my final remarks. So any sufficiently advanced technology is indistinguishable from magic. So users usually don't understand how it happened, technically how it works, but that is the fundamental of the technology. Create that magic between you and your clients. Thank you.
Thank you, Andrius. I love how you're messing with our minds, with the minds of the speaker, the listeners. It's really a lot of things to think about. I will try to ask a very quick question since we're running out of time. What, for you personally, maybe when you began this journey of learning about blockchain and becoming an expert in this field, what was the I don't know, maybe the thing that you changed your mind most about from the very beginning, let's say, or that you had some perception and then it turned upside down?
Yes, and it is a brilliant one. It's basically, it took me like 2 years basically to understand that, and that is important also for any specialist, developer, consultant, or anyone basically that is going to work or thinking about the blockchain. So basically, only when I understood that the key is decentralization. So basically, when you're thinking about your business, you have to have the certain mindset where you have to understand that you will be losing some of that power of your basically how you work and how you make those decisions basically. And that point of letting go is the key basically about changing the perspective between you and your client and the market itself. So it's basically the fundamental of that technology of the blockchain is I already mentioned it, decentralized consensus. So it means that there is no authority that is basically setting the rules, but this is a pure decentralized way which has to agree on certain rules and certain ways how it works. So basically, it is self-regulated environment where everyone, like user, provider, everyone has the equal rights and equal stance. So this is the fundamental for me, and from there I was just evolving, and that was my eye opener to understand the technology and what it gives.
Thanks a lot, Andrius. Thank you very much. Very insightful. A lot of food for thought. And now my very last presentation for today. And after that, we will have a very short maybe discussion. We have received a couple of answers online from Facebook Live and from YouTube. We will try to answer those in the upcoming 15 minutes or so. And I have a couple of things to share from my side. Let's hope it works. Okay, just a second. Yes, now it should work. The first thing is from the BlockStart program, we made a research to identify the sectors that are most ready for implementation of blockchain. So I will very quickly present the research that we have done and actually the results that we came to. And the second thing is actually ties very nicely to what Andrius said at the end of his presentation, saying that you need to evaluate if blockchain is a good fit to your business, to your to whatever you are working on. And so I'm going to present a tool that hopefully helps you evaluate that fit, and is blockchain a good technology, or DLT is a good technology for you to solve the problems or use the opportunities on the market. So very quickly, these are probably the areas that come from the inherent properties of blockchain, such as the immutability or the decentralization that Andrius has mentioned, that you're losing control. There's no one authority that is making all the decisions, but you're actually decentralizing this decision making. So these inherent parts of the blockchain technology actually are the key factors when thinking about the highest potential, highest impact, and also if you should use blockchain, or if use of blockchain technology makes sense for you as a business, as a company, as a startup, or anyone else that is thinking about it. So what we did at BlockStart, we combined expert interviews with desk research to come up with a ranking of the sectors according to certain criteria, and dove deeper into those sectors which are most ready, most ripe for blockchain adoption, and along the way gathered a lot of other interesting information. So these, you can see the criteria that were used to identify the most promising sectors for implementing blockchain solutions. As I said, we did quite extensive desk research. We talked to 30 experts in blockchain, and from different countries as well as from different areas, and we ranked the sectors, economical sectors that are most have the biggest potential or the biggest promise for blockchain implementation. And these sectors are, not to use much time for drum roll, wholesale and retail, fintech, and ICT. And in the next about 6 slides, I will very quickly go through each of those sectors and tell why. So the first one, the wholesale and retail, it's a huge sector. First of all, there are a lot of SMEs that are working in this sector, and there are also some some drivers such as the provenance or the need for increased efficiency, for example, particularly in supply chain, and other areas that that are the driving forces behind blockchain implementation. And we are actually seeing quite a few SMEs working in this area and working developing blockchain-based solutions. So these solutions can be tied to, as I said, supply chain. They can be used for proof of the provenance of either goods or raw materials that they used to produce goods, and other use cases. The fintech sector, or the finance and insurance sector, is well, first and foremost, is very, very popular. Probably the most popular sector, if we talk about the number of solutions. It is somewhat contradictory because there are high regulations and higher legislative barriers, but at the same time there's a need for bringing down costs, for eliminating middlemen or intermediaries, and also there's quite a few of technology and investment already in the area that drive the use of blockchain in the fintech sector. And the particular use cases or solutions is obviously the identification, know your customer requirements, and also for peer-to-peer solutions or other solutions using blockchain that enable the riddance or reducing the number of middlemen and enabling the peer-to-peer rather than an institution to a client relationship. And the last one, the last sector, is ICT. For obvious reasons, it's very high tech, and it also has a lot of bright minds thinking about how to improve processes, and blockchain solutions can also help to in various areas, such as encryption or distribution. Not only data, but also decision making, as Andrius has mentioned. But these are some examples. And coming to the end of my presentation, as I announced in the beginning, we also developed a tool that helps to find out if you need blockchain. To put it very bluntly, the initial name was DLT assessment tool, which we found that is a bit complicated. So indeed, the idea is to, by using a set of questions, such as, for example, diagnostic questions. Well, first of all, a little bit background, but then, for example, do you need a trusted third party to be replaced or automated? Are you working with digital assets, or for example, about supply chain, and do you need to track the movement of goods, and so on and so forth? So by answering those questions, one can get an evaluation at the end to actually make conclusions about if in some or several of the areas implementing blockchain actually makes sense. For example, if a lot of participants on the market could benefit from removing a central authority, or getting rid of intermediaries, or tokenization of some assets, or digital or otherwise. These are some of the areas that could be where blockchain could be beneficial. So this tool actually helps you assess and evaluate, and to use it it's very simple. Just go to BlockStart page, blockstart.eu/DLT, and use this evaluation tool, assessment tool, and get your answers there. So that was it from my side. And now it's time. We still have a couple of minutes for questions and answers. I will first actually have one question from a viewer on Facebook. There are a couple of questions on YouTube as well, but they're very well, technical in one way, and also might take quite some time to answer, unfortunately. So the answer the question is about privacy in NFT. Could NFTs be used to centralize personal data or have your data on chain as an NFT? A bit of a philosophical question maybe, but I don't know who would want to dabble at it, Andrius or Silvan, somebody else.
Yeah, I can say something to that, I guess. From a technical point of view, I certainly see possibilities. In particular, if you want to make data tradable, I think a reasonable example is looking at finding ways to perhaps selling your personal data or getting rewarded for letting people use your personal data, and use cases around that. I haven't thought through that concept in a great level of detail, but I see potential possibilities there, but you'll run into many of blockchain related concerns with regards to privacy and GDPR compliance, just with NFTs as with other use cases as well.
Yeah, I could add up to that basically. So so yeah, it is technically available, but I wouldn't save the data on blockchain, but basically link the data with the NFT as a certificate of ownership, or certificate like a transferable something that, for example, grants an access to some data. But then there's some issues which are related with still with the data, for example, that is stored somewhere. So basically, how to make this connection between the NFT and the data solid. So basically, because for example, I still, as the owner of the data, I can change that data, and the NFT is usually having just link to that data that I have still the ownership. So it is technically has some challenges, and basically that those challenges has also some solutions, but it requires quite a good technical engineering as well as data privacy understanding, and what Silvan was basically saying about those issues with the GDPR. There will be a concern basically how you treat that NFT and basically what it represents, and how you align and comply with the GDPR.
Thank you. We don't have more questions from the audience that are not very technical, but maybe you do have some questions to each other, or some comments on the presentations from each other that you've seen, or maybe some final remarks, and so on. So please go ahead.
Yeah, my final remark maybe will be that thank you, colleagues, for nice presentations, basically lots of interesting information. I'm looking forward, Baptiste, for the research and to read it and to understand what is the opinion of VCs and what is the situation in the blockchain and capital, basically raising the capital, how it changed during the time, because we have some startups in-house basically cooking. Mirko, nice presentation about definitely interesting topics and how you can use the blockchain. Silvan, perfect. Basically, as Vytautas said, there's quite difficult and complex topic, very well presented, and Vytautas, as always, brilliant introductions and moderation.
Thank you, Andrius. Baptiste?
Thank you. Yeah, I mean, thanks for that, and please reach out. And for anyone listening, if you're raising fund, please reach out. We'll have a look at the deck, and we'll always come back to you. I can't promise we'll make everyone happy, but we'll make some happy. But yeah, looking forward to publish that report right after the summer. And thank you for the invite, obviously.
Thanks for joining. Silvan, Mirko, do you have some parting thoughts, remarks?
I really
Questions?
like these myths from Andrius. Sorry, I'm seeing that my connection is not stable. I hope I'm still audible.
It's still okay.
Yeah.
So far so good.
I liked it because you can see some maturity in the acceptance of this whole blockchain, like how this concept is slowly evolving into something that we can discuss under financial terms and ongoing business. Maybe like that. That takes a time. It takes surprisingly long. I think people who have been around since 2018 or even before are a bit restless to see it evolving faster. But I think that's the time it takes until these concepts they're tested and tested again and tested again, and with including the failures and the trials, and that's quite normal. But I saw from the myth how we're getting ahead, or how it's moving forward, quite strongly actually.
Thank you, Mirko. Very encouraging thoughts. Silvan, please.
Yeah, from my side also, thank you so much for first of all inviting me, and thanks to my co-speakers for the great presentations. I think as a final remark, I see that the world, and in particular this scene, the blockchain scene, is going into a direction that I very much like, where many of the participants, including those building companies and also those investing in these companies, do see that privacy is a priority, and that both decentralization can support with that, and privacy and decentralization. So blockchain and GDPR, if you have a kind of freely translated version of that, do go hand in hand and are a very nice combination. And overall, I think make this world a better place. And I'm happy to see that that's the direction that we're going into. So no, thank you for giving that a platform also.
Hey, thank you very much. Thanks everyone for watching. Thank you, our dear experts, Mirko, Andrius, Silvan, Baptiste. This is the end of our webinar today. Thank you, everyone, and see you next time.